right, everybody. Happy New Year. What is it today? Wednesday? No, Thursday. Sorry. Still hangover here. But anyways, let's begin here. We got an interesting session so far. Look at this yo-yoing back and forth. Going back to 591, coming back again. And of course, the computer is doing all of the trading based on the VIX. I mean, kind of the inverse, right? Inverse look. That's what's happening right now. Which could be kind of a trappy tape, so you got to be really, really careful with the day trading thing. You got to have a longer time horizon. But before we begin, let's just give it a little bit of a check here. If you can see the picture fine, this is the SPY, the 1 minute chart. We should switch to the 3 so we don't act like monkeys here, because the 1 minute would throw you off. But if you can see the picture fine, you can hear me fine. Just let me know feedback in the comment section, and I'm going to be back right away. All right, thank you so much. Let's begin here. If you're listening from Patreon, by the way, you can click on the YouTube icon. You can join us with your YouTube account, or you can leave your comments on Patreon, or leave your comments in the dedicated channel on Discord. I'm going to answer all of them, look all of them, and answer all of your questions. But let's begin here. As I said, look, you can chase this action all you want. The likelihood is you're going to get trapped. So I'm looking for, if we turn negative, see, if the SPY goes negative, then you could see acceleration of the selling. And at that point, it'd be worthy to kind of trade some puts, 0 DTEs, tomorrow's expiration, whatever you want to choose. But right now, it's kind of trappy. You got to be really, really careful. But there is one important finding, which is we had a test here at a 591. And we couldn't make it. So why couldn't we make it, right? There's a seller showing up at 591 again. You see it here showing up in the VIX. I'm looking at the VXX. I mean, tick by tick, ladies and gentlemen. I mean, you see here the topping that we got here, at least in the 1 minute. Immediately, we've seen a rebound here. So it's tick by tick. It's all algorithms. And like I said, you got to be really, really careful, because we can chart the VIX here, try to figure out where we're going to go. We look at the hourly chart, no conclusion. We're just consolidating here, doing nothing at all. So it's kind of hard to say it's going to go up or down. I think it's going to go up more than down, because if you look at a longer term chart, like the 4 hours, for example, it looks to me like consolidation for a little while and waiting to release that energy to the upside. But that's just speculation. We don't have any evidence to it, really. So you have to be really careful here with the action, folks. Let's go the 1 minute. See, now it's popping higher, SPY coming back down. If we turn negative, I would say, yeah, you can fire up a few trades, 0 DTs or tomorrow, or the stuff that I gave you, the 585, 575, you can do 580, 570. And of course, bear in mind that in SPY, the 50s are confirmation for bearishness. If we close above the 50 on a daily basis, you got to respect that, okay? You got to respect that the SPY may be finding a footing right here in a double bottom, wants to go higher, so that's the upside risk that you have to be aware of. But I mean, you take these lows right here, recent lows. So the low here was 584.41, 584.42, so that's an important number that we have to identify. So we'll do this 584, let's call it 40 to be conservative, 584.40. If we take that number out, you got to double down on these puts, because we're probably going to head down to the 100. That'll take you all the way down below 580. So that's a really important number you got to write down, 584.40. If we take it, go ahead and double down on these puts. If you got them, if you don't, you probably want to enter new ones. We'll keep it here, because this is going to be really volatile tape. See, based on the tick by tick for the VIX, that's all what's happening right now. It becomes really important, before we talk about the SPY or the Qs and all of that, look at the individual components. And what I'm seeing today is at least see the winners from last year who were rallying higher. Now we see them selling them. And by the way, Apple is, if it closes like this, it's probably going to give us confirmation for more downside to come. But what does this say? That Apple is negative. Let's see, it's down about 2% or so. What does that say? It says that there are folks who are selling the winners from last year. So Apple was the winner, at least in December. Now we see folks booking profits and Apple becoming the weaker card. On the other hand, you see NVIDIA a little stronger today, because it was the loser in December, the laggard in December. We see a lot of losers December, like ExxonMobil, for example, now beginning to move. So there is a little bit of rotational element that I'm seeing. Whether that's going to continue or not, I mean, look at the names here. Let's see the gainers. I mean, some of these lithium plays, I like these. That's why I keep my QuantumScape shares. Laser been really painful, but I think it's going to come back this year. I have Neo too, so all of these are going to be hot, in my opinion, in 25. But you see the stuff like Starbulk, that's what's going higher today. So there's a little bit of rotation element. Papa John's all of a sudden rebounding. Carvana, by the way, you got Hindenburg now shorting Carvana, and this is the response. They popped it higher. We'll see if that's going to stick or not. Uber was a loser, right, for December at least. Now it's coming back. So you see that rotational element, and then you see some of the gainers here. Boeing was a winner in the fourth quarter. That's being sold. Tesla with the number that came out this morning. Palantir lagging. Delta lagging. So you see there is a rotation going on, folks, but it's not strong yet. But I expect more where that came from. So if there is weakness in the SPY, such as we take the lows, or we turn negative rather, then we take the number of 584.40 that I identified in the daily chart, you probably want to pick on the weak that is likely going to sell if you want to pick the individual names rather than the indices. And that's probably going to be Apple. Apple is probably going to be the weakest. So if you look at the hourly chart, it looks to me that we're a little oversold here, but if we take that number, we might flush down the dailies. Sure, we can rebound a little bit, consolidate, fix that a little bit, and then come back down. So long as the rebound is within the body of the hourly candle, then we come back and cut it. You'll see more downside to come. The stuff that was lagging, like NVIDIA, for example, maybe not my favorite to pick up shorts on right now if I'm going to pick the individual names, because if you look at NVIDIA, it looks like it may be trying to do some fixed job here to try to retest this trend line. And by the way, the bull and the bear that I got right here is my 50 is the bull confirmation. My 100 is my bear confirmation. We're still within. But again, NVIDIA is, you see the look here, that's a little positive, which is, by the way, if you short SPY, short the Qs, short chips, short whatever, a really good hedge against shorting the indices would be, for example, having short-term calls on NVIDIA. That could be Friday tomorrow, that could be next week, but that could be a really good hedge because NVIDIA is the one that looks pretty good among the big guys. Let's look at some of the indicators really quickly here. The dollar, that's going higher, so we look at gold right away. Let's see if there's confirmation or not. Gold is going higher, but the dollar is going higher, so we're not going to trust the move in gold yet because the dollar, if it's going higher, whatever move you're seeing in the GDX, for example, GDX is doing pretty good today because of NEM. But it tells us that the move is probably a rotational in nature because folks are trying to buy the laggards. But you cannot trust it or follow it because the dollar is still going higher. So be careful here. Could be a trap. Looking at bond yields, they were all over the place, but a little to the downside today, maybe rolling over. So we see the IWM as the outperformer. But again, it's fading too, so it's not really outperforming by a lot. It's beginning to fade. I think it's going to follow whatever the SPY does at the end of the day. So these are my notes, folks. I don't have a lot. I mean, Tesla, if you looked at that option tracker, let's do the hourly chart here. I got the 360. I'm kind of nervous that maybe I should have picked something lower because 360, the calendar spread was expensive to begin with. All Tesla options are really expensive because the market maker is pricing in that we're going to close the gap right here. When the earnings report come out, we're going to erase the entirety of the post-election rally. And that's why they're pumping the premiums. But again, if we go down, I mean, it's a little oversold. You see how oversold it is in the hourly? So if we go down and consolidate for a little bit, then cut at some point before the 17th, come back up, I think that's going to be okay. So we'll keep the trade as it is. But now you have confirmations that Tesla's breaking down. Then you look at the weekly chart, you're probably going to see the damage getting a little evident here with a topping candle. Whoops. Let's clean that up. You got a topping candle, a little bit of hesitation here. Now, I think this candle is going to close negative, so that's going to be our confirmation that we're reversing. And you're probably going to settle down here at this consolidation range, 330s, 340s. And then I think this report here is going to be critical. If the deliveries are down, I think the margin is going to be bad. So it might really flush down in a big way. So Tesla, not looking good here. And be honest with you, you guys see what's going on in social media. Folks are saying, oh, it's going to be 500 by the end of the year. That didn't happen. Now it's going to be 1,000. It's going to be 700 and this and that. So that always scares me. It tells me that, hey, if you're a Tesla shareholder, you got to hedge. You got to book some profits, do something here. Lastly, Bitcoin before we go. Bitcoin is also reversing, and I would look at a reversal in Bitcoin. So if it goes negative, still positive for the day. If it goes negative, that's going to solidify the evidence that you got to go and buy some puts in the SPY in the market, because we're probably going to head down and the VIX is going to go higher. So we'll keep it at the 3 minutes right here in the SPY. See what you guys got. Happy New Year, everybody. Morning. Ray, thank you so much. John, Jerome, Senior, OCK, Christina, thank you everybody for joining. Let's begin here. Senior says I had the 250 puts for Jan 17 that I bought in December. In 120% profit this morning. Near the low, I sold the 240 puts for Jan 17. Which ticker are we talking about here? 250, 242. Okay, so I'm not sure which ticker we're talking about here, but I'm going to try to speculate. And I think maybe you're doing Apple, right? Because 250, okay, Apple. Apple makes sense. So we're doing the 250 puts for Jan 17, which what I got. You bought in December, up 120% this morning. You probably want to sell the 245 or the 240. You sold the 240, so that's pretty good actually, because 245 is already in. So if I might actually roll my 245 that I sold and sell the 242 now that we cut below. So that could be one way to update the trade. The other way would be booking profits from the 250, 240, and then we switch down to 240 naked, and then we sell the 235 or 230. So there are multiple ways to do it. If you like the 250, you can keep the 250 and just roll that 245 to the 240. So you have to buy it back and then sell the 240, which could kind of reduce your profits a little bit. So the best way is maybe book profits and just reduce the whole strikes to expiration date that's below. But keep in mind, a little oversold in the hourly, so I anticipate that we're going to try to rebound. So that 245 will be out of the money at some point soon. But you did pretty good. I think opening the 240 is a pretty good move at the lows today. We don't want to you can roll it to the 245. Okay, you can roll it to the 245, but let's see how we're going to fix this oversold conditions first. But right now, I think you have 250, 240, keep that. Do you want to do the 250, 240, 230 put butterfly spread? Let's not do that, because if Apple indeed flushes down because of this taxation issue that it was the biggest winner in December and now folks are going to book profits, what if it is trading at 235, 233 before the 17th, right? Now you're going to ruin the trade. So I would not do the butterflies. I would stick to the debit spreads. So that's Apple for you, Craig. Happy New Year. I have downside target 360 for Tesla. Yeah, I'm with you. Chart looks ugly this morning. I think put lotos is still good for tomorrow. Yeah, you didn't get the tracker video, but we talked about Tesla. Yeah, and I said that 360 is my number. Now I'm afraid that it's maybe a little too soon. But we have, see, the 50 comes down in around 249. So I think that even if we go a little below, we might get a rebound by the 17th. We might be trading a little above or around. And the 360 that we sold in the calendar spread, if you did, if you didn't, you know, they have any other trade we can do right now. If you didn't get the 360 calendar spread, yeah, you can do some trades here. You can do you can buy the 360 and then sell the 50 moving average. It's at 350. So you do the 360, 350 put spread. You can do that. For Jan 17th, that's going to be an okay trade. But yeah, 360 is my number too. And the reason is, look at these triple tops that we've seen here. Struggled a little bit and then we broke out. So it makes sense to retest that number as support. Christina, can you give me your thoughts on Coinbase? Been shorting since 320. Can you also go over HD? Bought a small position. Okay, let's look at these two. So we have Coinbase. We're shorting at 320. A little bit of dangerous, but you got it pretty good here. You nailed a really good short, at least so far. I think my 2 cents. I think that Bitcoin is going to correct because it already kind of front loaded a lot of gains based on the Trump optimism. And I think with that, Coinbase is going to go down. So for me, looking at the chart of Coinbase and try to to do technical analysis on this one doesn't really make sense. I'd rather go to BTC. When I do that right now, look, we're still within range, so you want to keep that short. I would say your hedge, you begin to be really careful if we hit these support lines right here. So the low was 288.50 and here 289. We'll take the lower number to be conservative, 288.50. If we begin to reach that number, you got to be really careful about your short. But again, look at BTC. Right now it is in no man's land, just consolidating in the weekly. If we take 92.55.86, which is my number here, it'll probably lead to a flush. You probably see capitulation and a flush. And with that, Coinbase will flush down and your short is going to be fantastic. HD, what do we do with this guy? Not doing much. But again, HD was one of the losers in December. We're not at the cut loss yet, so I think you'll see some rotational element here in Home Depot. We got some construction data today. We got some pending home sales that came out higher. New home sales came out higher. So I think that you're going to see rotation to Home Depot. So I'd keep it. I'd like being long Home Depot right now. Okay, John, Happy New Year. MC Kirk, Happy New Year. Carvana short. The waiting was worth, thanks to Hindenburg. Carvana been heading down for a while. I mean, look at this drop that we got so far. Let's give it, because somebody asked about this. I forgot who asked about this, but it was in the stream a couple of weeks ago. And we said, yeah, stick to the short because we're probably going to close this gap right here. We did. So we achieved kind of the target that we were looking for the trade. And I think now that Hindenburg got into it, a lot of shorts are saying, you know what, let me just cover the short that I got here because it might become a target for a squeeze or whatever. I'm done with the gains here. I mean, if you made 29%, even if you shorted right here, but you made 22%, right? So you want to book those profits. That's natural. But can we see declines after this initial short covering? Yes. As we get out of these oversold conditions in the RSI, we can open the path for more downside. So if you plug in the 50, we're below the 100. We're probably right at the 100. And you can see it's support here. So the 100 is important. If we close below the 100, and that's 199.59 right now, that's going to change, of course, in the course of the day. But if you have a closing below the 100, it'll probably suggest that we're going to head further to the downside. And the next consolidation target becomes here. So that's going to be within the 100. We take that, we'll probably go down to the next consolidation range. That's going to be about 170s. So you could have another trade in Carvana. And if you short here, maybe you buy Friday's calls, right? Friday's calls at 215, 220, just in case we get a squeeze and the shorts panic and all of that. But if you short and you're confident this is a scam, as it is, and Hindenburg highlights all of that, it's a scam. What they're doing is absolute fraud. I think you see a flush down, at least here to the 70s. So it's worth keeping, but it's also worth hedging in the short run. Okay. Do you think it's the time to add to my Palantir Marsh 45 puts? No, look, your Palantir 45 puts are aggressive as it is already. You know, you're gonna require a drop to the 100 days moving average. Not saying it's impossible, because you have time. You have a lot of time till that plays out. But we're not going to add to that until we see some sort of a validation to the thesis. And that would be if I see this reaction right here. And we've seen a strong rebound from that point, and then we rallied higher. So to me, the low here would be 68.07. So I'm going to take 68. I think if you take that number, then sure, I would say you can add to that 45. But right now, it's a little too soon. For all you know, it could be just coming down a little bit, then we go higher again, because Palantir remains a hot name with the retail investors. And by the way, an important difference. Apple, that's the institutional investor. So when it comes to Apple, the institutional investor says, I'm up for December, let me book some profits right now. So you see it going down. Palantir is more of a retail investor phenomenon. And the retail investors, they're not going to book profits because they think that Palantir is going to be $1,000 stock someday. So there's a little bit of stubbornness here. They're only going to sell if there's a break, and I think that 68 is the number where we see a flush from that point on. Jeffrey, Thank you for joining. I jumped on this live chat late, still learning how to navigate your Discord site. What is your take on the SPY today? Jeffrey, welcome to the show here, live stream. Of course, Discord, you have the Top Gun chat. You have two channels, really. The Q&A, which we're going to do this weekend. I know a lot of you posted the questions there, so we're going to do it this weekend. And then you have the regular chat that we converse in. So what I see here in the SPY, you got to be really careful, as I said, because you joined us late. I said, if you're going to do day trading in the SPY, you have to be really, really careful, because it is really going tick by tick against the VIX. So you see it here. I mean, it's the inverse, right? So you see here sort of an inverse and a shoulder going on. Sorry. Let's do that correctly here. Sort of an inverse here. Not quite perfect, but you see now the VXX is moving higher. Watch what happens with SPY, right? It begins to go down, maybe from a topping and a shoulder. So what I said here, two important findings right now. You don't want to initiate the day trades right now, because you're going to get your head chopped off based on this. Who the hell knows where this is going to go, the VIX. It's just popping and going down. So, and you see the algos selling and buying based on that. What you want to see if you want to buy the puts in the SPY is going negative for the day. Because once you go negative, you see acceleration of the selling by the algos, and more hedging, and you're more likely to catch a good trade. When do you go long? I think 591 and close above 591 will merit that at least you have to buy the 595 calls. For Monday, for next Friday, don't do it for the week, of course, because it's a little too aggressive, but you want to do it for next week. But right now, we're in no man's land, really. We just have this stopping in the shoulder pattern. You probably want to take the lower number, but again, we have to look for a longer time frame. And right here, we haven't even formed the shoulder yet, so it's too early to even identify a number to where we're going to stop. But if we just speculate on it, this is an important candle from a 3 minutes perspective. So the high of that candle is 589, so I'm just going to have 589 as my number. I think if we begin to close above 589, it increases the risk that we're going to have a revisit to 591. But this is what's happening. See, VXX drops down, SPY responds. VXX go higher, we see SPY responding down. So, I mean, that's what's going on here with the algorithmic trading that's going on. But my 2 cents, I mean, I try to chart this guy for you here. And you can't really chart the VIX right now. It looks like a bear flag. It suggests that we're probably going to head higher in the SPY. But again, for all you know, we could see a pop in the VIX. It's really hard to chart. So you have to watch it tick by tick here, and then watch the response that you see in the SPY. But better yet, you have to look at the bigger names, which is Apple and NVIDIA. And it looks to me that Apple in the daily chart, at least, it's not oversold. So if Apple maybe rebounds off 245.50 for a little bit, but I think it's going to cut below it and settle at 233. So I see more downside in Apple, and that could lead the indices down. If we look, let's say, a week from now, 2 weeks from now, we see the indices down. But then I look at NVIDIA too. NVIDIA is a little stronger, right? So it's looking a little better here. Bull flag, positive momentum. So if Apple goes down, NVIDIA goes higher, that could balance things out. So, as I said earlier in the program, if you short the SPY, if you short the Qs via puts or any other method, a really good hedge would be a short-term call on NVIDIA. That'd be next Friday. You buy some calls, or you can buy them tomorrow if you have shorter expiration dates on your puts in the SPY. You buy them for tomorrow, but I'd rather buy NVIDIA calls for, let's see here, if they're too expensive or not, because that could be a really good hedge, folks. NVDA, and we'll look at MicroStrategy in a minute, but let's go here. We're in the third. Let's price some of these here. If NVIDIA indeed pops higher, probably going to retest the highs here, and that's going to be 140, so we're probably going to go with 140. If you buy it for next week, it'll cost you 282, which is a little steep. For a hedge. If you buy it for tomorrow, it's going to be cheaper, but again, not worth it. So how do we deal with this? We'll probably do 138 and then we sell the 140, or we do 139 and sell the 141. You can do the 140, sell the 142. And that could be a hedge because you're spending 80 to make 2. If you're doing the 138 and then you're selling the 140, you're spending 1 to make 2. But at least there's a little bit of exposure where you can get some upside if NVIDIA goes higher but Apple goes down. Another way you can do it is NVDS. That's the bearish ETF for NVIDIA. So you can go with Jan 17th. You can go with the puts, right? Because if you're betting on the puts, you're betting then NVIDIA is going to go higher. And here, the pricing would be no volume yet. Right, so if you see volume, that's another method you can do it. It'll be hedge against your SPY. But go back to the SPY here, folks. 1 minute. The VIX, that's what I watch, by the way. If you're looking at my setup, this is what I watch. I'm watching the VXX. I'm watching the SPY. And right now, at least right now, it looks to me like a topping in a shoulder here. It looks to me like an inverse in a shoulder. But we'll see what happens. This is very unpredictable because it's just measuring what people are buying in the puts and calls in the live flow right here. And just a reminder, option strat will give you just a little taste of the flow. It's not going to be all of it. So if you look at the SPX, it's just giving you some of the flow, not all of it. But you get a little bit of an idea of what they're buying. Anyhow, that was a really good one. I hope we answered some of your questions here. Are you still holding 575, 580? Yeah, it's 585. You buy the 585, you sell the 575. Yeah, we're holding on to that because SPY daily chart, clean that up. Plug in your 50, we're below the 50, so that's my confirmation that if we stay below 50, we're probably going to have to head down to the 100 days and find support there. And if we do, we're probably going to close the gap right here. And that makes the 585, 575 a good trade. If we close above the 50, then nope, we have to cut the loss because closing above the 50 means that we probably found support here at the double bottom. We might go ahead and challenge the highs. So we have to be really, really careful here that a close above the 50 ends the trade. But right now, the trade is still valid since we're below. We'll keep it as it is. Christina, can you go over Amazon? Been holding a swing shares since 200. Amazon is looking pretty good today, I think. One of the better performers. But if you have 200, I mean, you're up about 10% or so. We want to preserve some of those gains just in case there is a drop. So what we want to do here, if we look at the weekly chart, look at the wicks, right? This is a really important wick because it gives us some support. And the low here would be 218.73. 218.73. You don't want to have your stop loss there. Your stop loss should be maybe around right here, 207. You have your stop loss because if we go down there, we're probably going to cut below 200. And maybe revisit some weekly or daily moving average. So 208, 210 will be my stop loss stock from the stock price wise. But from an options perspective, 218.73, if we take that out, we want to buy a hedge. So let's price in a good hedge here all the way to the 17th. Amazon, we'll buy some puts. And again, since we're going to have a stop loss at 210-ish, we want to buy something between, so it's probably going to be 215, 210. That's one option. I'd rather do it naked when I hedge because it also gives you the option to sell at a certain price. So I would leave that up to you. Jan 17, either the 215, that's going to give you a protection from after 4.3%, or you can do it as a stop loss at 210. Which in that case, you don't need the stop loss because your put is going to be the stop loss. And that costs you 117. Either way, 215, 210, you pick whatever you like. But I think it's worth hedging because if we have the VIX going higher and we see the winners being sold, yeah, Amazon can be also sold and then you'll see it settling below 200. We don't want to lose the gains that we got already. You sold small family office. You sold the 5 Tesla calls at 700 for December. Yeah. I mean, this was one of the easiest trades ever. And if you're a shareholder, you should have sold the 700 calls were so expensive. Didn't make sense, but in this case, you exploded another way. You sold them and you made an easy profit today. Good for you. I would have actually been a little more greedy and kept them for longer. But anyways, your thoughts on OKLO and SMR. There is new info and litigation going on between nuclear reactor companies versus state of Texas to reduce regulation. Could you be favorable for these because of Trump? So let's look at OKLO. And if we look at the daily chart here, it's been hot for a while. I mean, this guy, since the nuclear play happened, it's been holding, but technically, when you see a chart stuck like this, it'll probably be a distribution pattern on the weekly chart. It could be, of course, consolidation waiting to unleash the energy higher, but when I see week after week after week like this, it tells me that probably distribution pattern. You hit the earnings report and then you flush down. So OKLO is kind of dangerous here to initiate a new trade on it. SMR, on the other hand, see this one, we kind of anticipated a break here. We came back down. Let's see where the 20 is. We're exactly at the 20. So SMR maybe makes a better case. And I'm looking at the technicals purely. It makes a better case because it already got sold. So it might be sort of a OKLO been stuck. This one went down. It could be the opportunity to buy, but I would watch something important here. I would watch what could be a topping and a shoulder and further declines to come. So I'll take the low of this reaction right here because once we got this reaction, we rallied higher in the name. So I'll take the low right here. That's going to be 1746. If you take that number from a daily close, I would say don't do it. Be careful in buying the dip in SMR. But definitely between the two, at least from a technical standpoint, I do like SMR as a buy versus OKLO. Is it too early to buy calls on the Dow Jones? Not too early. I mean, the Dow Jones will benefit from a rotation, but you got to remember, Dow Jones is also price-weighted index. So if you have Boeing down, if you have Apple down, it wouldn't be the best ticker to buy. Maybe you're thinking about VTV or RSP. That could be a better choice. IWN could be a better choice. Even the IWM could be a better choice if you're bidding for a rotation. But I would say hold your horses because it's really interesting that the IWM was so strong in the morning and now it's kind of fading. And I think if the VIX moves higher, folks, look at this. The SPY now playing the head and shoulder, right? And the VIX playing the inverse on the shoulder. If that continues, I think that even the Dow Jones and the RSP and all of them going to begin to fade. So, yeah, you might be more into buying puts in the indices. That's the trade that's more attractive right now versus the dips in Dow Jones. If you want to buy dips, speaking of Dow, maybe you should buy it on Dow Chemical. But that depends on the dollar going down, and the dollar today is higher, so no confirmation. We can't do it. Stick to the puts here. Okay, Stefan, I'm sitting on massive profits from trading the VIX last. I mean, you did an amazing job trading the VIX. Some of these trades that you've done should be taught, to be honest with you. If you had a mid 8-figure cash pile, what would you put it right now? I would definitely not buy the indices right now. Okay, because I think we have a correction. We have to shave off some of the fluff. And to me, I mean, I would say, look, you put it in the laggards, like the RSP or any value ETF or any dividend ETF, like the SPYD, because those are the guys that are going to benefit from a rebound. Maybe that's the case, but I want to see how they're going to react if we see, let's say, a couple of days of Apple, Nvidia, Amazon going down and the VIX going higher. Can these guys really hold, or would they just fall down with the weight of the actual indices coming down? That hasn't been tested yet. And I'm afraid that if I say, hey, buy the SPYD for a rebound, or buy the XLV for a rebound because that's been hammered, I'm afraid that if I say that, we see the big guys going down and then everything goes down with them. So that has to be tested. If it is, say Apple goes down, and then you see Nvidia going down, Tesla going down, all of the hot stuff going down, but you see the dividend stuff beginning to catch, the value stuff beginning to catch a bit, I think the opportunity is in buying those, at least for a trade, for a couple of weeks, couple of months, and capture some, maybe a dividend if you're lucky, or a few profits, 5%, 6%, 10%, and then get out of the trade, because the year is going to be really challenging with the new administration and the policies and all of that. So we can't even tell you to go gold, by the way, because the dollar is surging right now. So we can't even say gold. Got to be careful with that. How about UAL? More puts. Let's look at UAL. We covered that in the tracker too, by the way. And it's 95. 95 is the confirmation number. My fear with the trade that I got is I got the 90 and 85 diagonal. it'll still produce profits. But what if there's a flush, right? If there's a flush, I think we can play with it in terms of maybe buying the 85 for February and then selling the 80 or 75. But right now, let's not count the chickens before whatever the saying goes. But anyways, we have the 95 here. We haven't closed below the weekly. In the weekly candle, we haven't closed below 95. So we have no confirmation. You can initiate the trade right now. And again, the trade is the 90 puts for February. And then I sold the 85 puts for Jan. And I think it's a good trade. Let's price it in here, see how much it costs right now. So the trade is February 21st. I got the 90, which is kind of getting expensive now. This was cheaper before. That we sold the puts at the 85, but we sold them for Jan 17. This is kind of expensive now. It's getting more expensive than what I got it. So we might want to play with these. You play here, you're not going to get a lot, but yeah, the spreads are a little far. I think that's the problem, but it's going to be something like this. 90, 85, that way if we go down, I mean, this is not the best price right here, so I have to be careful. I would probably do 85, 80 if that's the price that I'm doing, because you want to flip it to 5. 5 is the difference between these guys. And if you do the 90, 95, and you're paying 350, then we flush down below 85 before Jan 17. Sure, you're going to make profit, but it's going to be a really tiny profit. Of course, the other thing is to do naked puts. If you're okay with paying at the 90 here, that's 11%. I mean, see how the market maker is pricing all of this in? This is, by the way, a lot more expensive than it was Friday. So the market maker is beginning to smell something going on here. Probably the flows, the puts that they're being bought right now, indicating to the market maker that, yes, this guy's going to flush. So that's what they're pricing in. In that case, you might want to go out of the money. 85, probably. 85 for the 14th. Cost you about 260. Take a shot. Or, alternatively, you can look at the name that maybe folks are not looking at right now. And you have earnings here at the 10th. So maybe you want to go with Delta. Because remember the analysis that we've done. UAL, Delta, they move together. I mean, just add in Delta here. You see that they pretty much move together. So why would I get the most expensive option when I can do Delta, which is cheaper? The option's not as expensive, but it'll give you the same move. So maybe you want to think about Delta instead. You can look at other names like Jets, could be one of them, Jets. The airlines ETF, it's a lot cheaper because it is cheaper in price, but there is no volume here. So I would go with Delta, to be honest with you. If I'm shorting this right now, cheaper option would be Delta because UAL is getting really, really expensive right now. Okay, I just followed what you taught me. It may have been a good... Thank you so much. Appreciate it, Steph. But I mean, I saw those trades and we talked about them. It's unbelievable. UD Wheat. Hey, Mav, I played SLB for an oversold bounce. Sitting pretty right now. Where do you see the chart heading? Today, energy is doing pretty good. So I'm optimistic about the comeback in energy. You look at the futures. I mean, we're trading 2% in WTI, 2% in Brent, 2%. I mean, you see the gains here. And I think that if you look at the energy, it's finally beginning to respond. So yeah, I would stick to SLB here. I think it's going to be a gainer, and all of the energy cohort is going to begin to gain. So I'll stick with it. Stick with it and keep a stop loss at the price that you bought it for. Since you say it's sitting pretty, I think you're doing pretty good here, but just set a stop loss at the price that you bought it at and keep SLB, because I think this is going to be sort of a downward channel. If we do a trend line here, whoops, let's do a trend line. Doesn't have to be perfection, but I think here we might go ahead and retest that line again in time. So we just set a stop loss wherever you bought it and keep it. Neil, thoughts on RGTI and quantum stocks? Those are still strong. RGTI and quantum computer is still a strong theme. Yeah, I wouldn't bet against them right now. I think these guys you want to be long, if anything. Just for you buy them. I mean, so many of them popping every day. So look at these quantum computing stocks, especially in the chatter and social media. Even if the company doesn't make sense, I think right now the rational trade for quantum computing is stay long, and if you're not long, just speculate a little bit and buy some shares. But as far as the puts right now, no, because the market maker is already pricing all of that in. So RGTI, if you look at the puts, for example, you want to go 21st. This is stock trading at $17, by the way. If you buy the 16 puts, it costs you $380. So the market maker is pricing in huge volatility because they anticipate that at some point it's going to flush down. But right now, it could be consolidation, higher we go, and then we flush down later on. So usually with these kind of guys, you want to wait for the initial breakdown, then consolidation. What you're going to see here is the implied volatility goes down when that happens. And then you take it on the next leg down. So anything that goes crazy like this, the best way to short it is in the second leg down, not the initial one. Because the initial one, the market maker is already pricing that in, if that makes sense. Okay, let's go back here to the SPY, folks. We do the 3 minutes chart. Oh, we're still stuck here. Not quite negative yet. Not quite negative to initiate that selling, but we're probably going to get there. Let's see the VIX. VXX still strong. It didn't take these lows yet in the 3 minutes. So VIX, a little longer, but that looks to me like it found some support here. So got to be careful. Hourly chart. Yeah, got to be really careful because it appears to me that this guy wants to head higher. And if it does, you know what the algorithm is going to do. So here's the SPY trying to rebound here tick by tick with the VXX. But as the VXX comes back, you see the SPY hitting down right away. So we'll watch this, folks. I mean, is there an important number in the SPY that you should watch? 589, you cross above, you probably want to begin ahead to 591. As far as the downside is the number that we talked about, which is 584.40. If we break that number, you want to double down on these puts. Right now, we're stuck in no man's land. We're just going to watch what happens with this volatility battle that's going on right now. Apple looking really weak. I agree. I think Apple has further downside to go. So look at these trades. 45 minutes, that's done. But here it is. It's breaking support right now. Hourly chart. Yep. It's going to get oversold at some point. I think it might find support right here at this range. So it's going to find support. But if it closes below 245, it's a good signal that it's probably going to head down to that 235, 233 target. So I agree with you. I think that Apple is weak and definitely you got to open shorts on it. If you want to price in something new, let's go here. Apple. Jan 17th will be good enough. We'll do the 240 and then we'll sell the 230. And that'll give you a trade that will cost you 160. Use that to be more realistic. Cost you about 165 to make 830. That's a pretty good risk versus reward. You can up it to 235 if you're okay with a lesser profit, but I think that this is a rational trade right now. Break even is only 2.5%, which is entirely possible if this is a flush down. You want to enter via increments. So one increment today because you have oversold in the hourly, so that could produce a rebound at some point. And then when you see that rebound happening, if it happens here, if it happens lower, we begin to fix the RSI here. And you see a point of failure, that's when you add the second and third increment. So that's the idea that I got for you in Apple. Go back to the SPY here, folks. Yeah, tick by tick, tick by tick. But anyhow, folks, let's see if we got some questions in Discord here. Thank you, by the way, for the New Year messages. I'm going to go over them, but I appreciate these kind words. Monthly chart on the Dixie looks like it's going to be a beast. Let's look at the monthly chart for the Dixie. Well, I mean, it's a beast today. Monthly, yeah, it's kind of scary. I mean, because if this guy goes higher, I mean, think about Apple. Now, Apple is reducing the prices in China, by the way. So if the dollar goes higher, that's going to be another headwind in reducing Apple profitability. Boeing, Whirlpool, all of these companies that make businesses or overseas, they're going to get hurt. And the panic happens when we take the highs, which we're not there yet. But if the dollar takes it, then most likely the 30-year bond yield would do it too. So if you look here at the monthly chart, I mean, to me, it looks like we're not finished yet. And by the way, a lot of folks say that, yeah, we're going to have soft landing this and soft landing that. But again, you've never seen a regime where we see rising yields, right? You go back to the 80s. We've always been in declining rates. Now we have rising rates. And that's something new. That's what Jamie Dimon was talking about. This is something new, and we don't know how things are going to play out. So we have to be careful and cautious about the economy at this point. On the Apple 250, 245, any management for it right now? Yeah, Bronco, we can book profits right now and just roll it down to the trade that I just showed you, which is the 240, 230. We can do that. So the 250, 245 is worth 293. So if you roll it down to 240, 230, you'll spend some money and keep some in your pocket. So this is one way to do it. If you want to keep the 250 and you want to take the 245 out, you have to buy it though, and then sell the 240, which is I don't think that makes sense at all unless you want to do the 240 as a butterfly spread. So my suggestion is you close the trade if you like it, if you achieve the maximum target, which we haven't yet, by the way, because we should be at $5. But again, by the 17th, so you could keep it, be honest with you, because if we go down below 245, this is still going to increase. You're still going to have to go all the way to 400. So you keep it as it is or roll down to 240 and then sell the 230. How about AMD calls? I don't know why people are so hyped up about AMD for some reason. I think that there's a lot of pumping happening in social media. And there is a reason behind it, by the way, technical reason, which is maybe it's been consolidating here for a little while, finding support, and then it rallies higher. I mean, all speculation right now, but I just don't see it. Look at the monthly chart. I mean, to me, it looks weak. Some folks, of course, pointed out that maybe it's sort of a cup and handle. I think that's why people are buying it. Remains to be seen. I mean, to me, look at the monthly vortex is turning negative, so I'll be careful. Look at the low here, 121.83. If you trade below that and close below, I mean, that's not going to be a good sign for AMD. That's going to be my line in the sand. So you can buy calls, but once we take that low, 121.83, forget about it. We're probably going to have further downside to go. Let's say AMD 40. We're going to go back to the SPY and watch the algorithmic battle. Christina, if I wanted to make a couple of grand next week, pay for an extra week of my night nanny, what is the safest way you suggest to do this? I would say right now that the indices are going down, so it'd probably be a put trade in the indices or Apple. Probably going to be the easiest answer. Or you can have Apple puts, Nvidia calls to balance it out. But if you want to make a couple of grands, you got to take some risk. And I think that again, if we take that number 584.40, I think it's going to be a safe bet that we're going to revisit that 100 days moving average. So the 585, 575 trade, or you can go with the 580 naked and SPY. That could be one trade where you can score quickly. You always want to keep a stop loss, of course, and that's going to be your 50. If you buy the 580, you go back below 584.40, then 584.40 becomes your stop loss if we trade above it again. You want to make money, a couple of grand. You don't want to lose money because you got to pay the nanny either way. But here's the SPY, 3 minutes. Keep it right here. It would be nice during the live stream we're able to listen in while being able to watch the market from our mobile device. The way you have it set up is unable to do that. Can you please work on changing? That's kind of difficult though, because yeah, I think YouTube, if you kind of look at another app, it takes my voice off. So the only way I can think about it is you listen to me from the phone, and then you watch your screen. So you can watch the live stream from your phone, and have your headphones on or whatever, and watch the market action. Small family office, that was pretty good. The trade on Tesla, easy money. You took advantage of it, so good for you. 580, what expiration date, Christina? We'll do Jan 17 for now. We'll do Jan 17. 580, let's do this here. SPY. 580 would be a move of about 2%, but it's kind of pricey. Wow. Yeah, $400 is too much. But the Qs. Things are getting expensive now, folks. Yeah, so I think you're probably better off going with Apple, because Apple has bad news today, and it's breaking down from a technical standpoint, right? So maybe you want to wait for a little bit of a rebound here intraday and then take a shot against Apple. It'll be Jan 17th. Once again, 240 would be my pick. That's a lot cheaper than the SPY, and then we sell the 230. That'll be 150. It's a lot cheaper, more affordable than the SPY. It'll give you really good profits. So I think Apple is the better choice. SPY, once again, since we see the VXX going down, you see the algorithms immediately buying the SPY. That's what's going on right now. Okay, that's a good, if you have YouTube Premium, you can listen to it and take the window down. So, gotta pay YouTube. Okay, there's a way to do it. You guys gonna figure it out. Let's see if we got anybody in Discord here. You can post your questions on Patreon too, folks. Look at it on Patreon. Interesting, isn't it? Just tick by tick, and you can't really figure out why the volatility is it's trading one way versus the other. I mean, you can chart all you want here, but nothing you can do. Now it's coming back. I see the SPY coming back down again. So we'll wait. I think that at some point during the day, if the buying failed here, failed again here, if we have another failure, I think that it's going to pretty much put it in the bag that we're going to go red in the SPY. Once we go red from a more significant time frame, we never really did it in the 5. The 10 will probably be my time frame. If we do it in the 10, or we go negative, then I'm probably going to say that, hey, you have the downside risk will open up because you'll see the algorithms also dumping. Here it is. VIX coming back up, SPY down. So anyways, we'll watch this, folks. Are we playing Dixie? Can we use SLV or trade GLD better? Look, the Dixie is moving higher, so my trade would be fading whatever is going on right now in the metals. So the SLV is going higher. I got it. But GDX is the most sensitive. So probably if the dollar continues to go higher and you see a positive closing, you're probably going to fade the rip in the GDX. It's only being bought right now because the laggards are being bought. So somebody's doing short covering in UMOUT. That's what's going on. So we see the GDX going higher. SLV's higher beta. Yeah, but SLV makes a really good hedge. So if you short GDX via puts, let's say Jan 17, then you buy your hedge as weekly calls for the SLV. That'll be a good hedge for it. But besides that, folks, I mean, there's nothing we can do here. As I said, if you're going to day trade, you're going to lose your head because you can't really do anything with this volatility thing. You have to wait for a more significant time frame when we see break one way or the other, and then we can begin to trade. if you haven't initiated already. But with that, folks, we're going to wrap it up right here. And we'll be back again closing hour. If there's anything, we'll cover it in the closing hour in the chat session. So be on the lookout. But thank you for the first live stream of the year. Good participation today. I'm seeing the numbers here. Pretty good participation. And we'll be back again closing hour. So thank you so much for joining us, folks. And good luck with the rest of the day. Take care.